These stocks are all looking very overextended. There's a bunch of sell signals coming in here. Again, we want to sell when this wave is up here, given a red dot, okay, because that normally marks the top, okay? It's not 100%, but you can see if you zoom out of the chart, every time this chart here, this is Datadog, comes up here, and this wave is up here since 2024, okay? It's been a great time to take some profits. Again, you don't have to sell your whole position, but when a stock runs really hard like this, it's normally going to pull back, okay? You can see it did a very similar thing last year in November. It got the red dot right there in 2025 at 183. It pulled all the way back down here to 100. So our goal here, right, we want to buy low and sell high. And I know how corny that sounds, but this indicator allows us to do it. Right? We want to buy when this wave is below this white line. Okay. All that means is we've had a big dramatic move to the downside. Okay. And then when we get up here, this is when we've had a big dramatic move to the upside. So if we're buying here and selling here, right, that's our trade. Okay. If the stock keeps going up, okay, we can't worry about that because we're traders, right? We're not buying and holding forever and hoping. We have a strategy and we try to remain consistent to the strategy by remaining disciplined and thinking about things logically, right? It doesn't make sense to buy companies when they're sitting, okay, way up here, 50% off of their 4-year average, right? Our blue line here, okay, that is the 4-year moving average. That's the 200 EMA, meaning the average price over 200 weeks. Because again, the weekly chart, we trade the weekly chart here. How do we know we're getting a fair price? Well, you come over here to the cheat sheet. If you look at the mean, the average, okay, you can use the yearly moving average. You can use the 5-year moving average. We use the 40-year moving average because it's what a lot of other traders use. Warren Buffett's right-hand man, Charlie Munger, said anytime your name that you want to own for the long term hits the 200 EMA, meaning it comes back down here into the line, that's where you buy. Okay, you just buy and hold at that point. If you're bullish on the company, you should have no problem buying it right there at the 4-year. Because again, how do we know we're getting a fair price? We buy it at the mean. And if we're getting a discounted price, it would be below the mean, like some of these names, like back here, Datadog, right? It was down here, given that green dot. So anytime we see this kind of separation off the 4-year moving average, that tells us that, hey, we're up here. People are greedy, right? People are delusional. They just think we're going to keep going up and away. Market's always correct. Okay, so Datadog's the first one. And you guys aren't going to probably like some of these QQQ. This is the tech sector. Again, we've had a huge move this year. Okay, and you're getting the signal. Again, the signal is just, hey, this is a potential top. Not a bad place to trim some. Not a bad place to take some profits. Okay, that way if we do pull back, right? And no one knows if we're going to or not. But again, we just try to be consistent. If you guys bought, this is the SPY, this is the S&P 500. If you guys bought back here in April, there's a lot of people in profits right now. Okay, if we lose 700 on the SPY, things could get ugly. The other one's the IWM. So again, this isn't 100%, we're going down, but again, just take note of where we are in regards to the average. And the last one is ARM, way up here.